Holding the line. Can you hear me? Can everyone hear me?
Loud and clear.
Okay. So basically, everyone, first of all, welcome to Angel Studio. This is a very special day today because today we have quite a few participants. We have in total 44 participants. Normally, our group is a little bit more intimate, around 10 to 15 people. But today we are very honored that we have some special guests from the diaspora and also from the Ministry of Foreign Affairs. So thank you so much for making the time to come here and welcome to Angel Studio. So maybe before we start, um, Vale, would it be possible to have a slide, just a simple slide on Angel Studio? Okay, so there's a lot of words. We'll just try to summarize it as quickly as possible. So Angel Studio is basically a program where we want to build a community of angel investors. This whole program is fully supported and funded by UK Indonesia Tech Hub, which is an extension of the UK Embassy or one of the departments in the UK Embassy here in Indonesia. And we're very happy that we have a community of 30 plus people, actually 30 to 50 people, yeah, we're so happy to now also have friends from the diaspora and also from the Ministry of Foreign Affairs and also from embassies all over, Indonesian embassies all over the world. Why did we invite you here today? Because today we have a super duper special guest whose schedule is very tight. So we're very, very honored and very, very happy to be able to get him today. And he's none other than Joel Shen. We'll get to you, Joel, in just a second. Yeah, I think you don't really need to introduce him. If any of you are on LinkedIn, basically you will have heard of him and you will definitely have seen some of his posts. We'll get to his resume and his CV later. Back to the Angel Studio, why we are inviting you here today is because we think it's very interesting, not just for Indonesians to invest in Indonesia, but also for Indonesians who are living abroad. But they're seeing, wow, Indonesia has so much growth and it's so interesting, and I would really like to know how to invest in Indonesia. And today we think that Joel maybe can shed some light on it, at least a little bit. I think it's very interesting for diaspora and also for foreigners who are more and more aware of this country, which is below the red dot, which is Singapore. So it's the big red dot, basically. So for the ones who have not been here, can we go back to the slide before, just quickly? So basically here we have introductions of startups and also small and medium enterprises in Indonesia specifically. We also have expert sharing sessions like the one with Joel Shin today. And we also have introduction to funding opportunities. We have role-playing exercises, peer-to-peer sharing sessions, speed dating, and so on and so forth. So a lot of fun going on. Now, about today. About today, we're going to have a peer-to-peer session or an expert session. You can call it one of those two. And the focus today will be on cross-border investment opportunities and challenges, because obviously, you know, you have a balance between challenges and opportunities. And then later on, we will also have a question and answer session. And for our friends who are not part of the existing Angel Studio community, we will talk to you later if you're interested to know more about the Angel Studio program. So without further ado, let's get right to it. Today, this is specifically for angels. So we're not learning specifically about investments, but we're learning on how to have the right tools in order to invest. So some angels, they sometimes have problems of lack of investment skills. They don't really know what the industry trends are. And obviously, one big thing, which for a lot of angels is not very exciting, but it's regulatory and compliance issues, or risks thereof. And hopefully, again, today, Joel will be able to share some light on that. So today we have Joel Shin. He's a corporate lawyer. Let's go straight to the next slide. Joel Shen, for the ones who don't know, he is a partner in the corporate team and co-leads the Withers Tech Asia team. Joel, please correct me if I'm saying some things wrong or if I'm talking absolute gibberish here. He advises corporate and venture capital clients in cross-border investments, acquisitions, and joint ventures. He definitely has a lot of experience when it comes to tech. And I think you're also head of crypto, right? If I'm not mistaken, Joe. We'll get to that later. He is a licensed corporate lawyer active in the UK, Singapore, Indonesia. He has 20 years of experience, so quite a lot of experience. And besides being a corporate lawyer, he is also the vice chairman of the Singapore Chamber of Commerce in Indonesia. So again, cross-border. So that's already sort of imbued in his DNA. And he's also a venture principal at Vickers Venture Partners. So I think it's time to speak to the man himself. Joel Shen, welcome to the program.
Thanks very much, Finn. Thanks for having me, Angel Studios. Thank you very much, Habibi Innovation Incubator. It's a pleasure to be here today. Good to meet you, everyone.
So Joel, I mean, I did introduce you earlier, but would it be possible if you just in a few words, maybe how you would describe yourself?
Yeah, absolutely. I mean, I'm always slightly embarrassed when somebody sort of reads out your whole CV like that. But I suppose relevant to this crowd is the fact that I'm a corporate lawyer. I
Yeah.
do a large number of technology deals, by which I mean sort of venture capital investment, um, startup series fundraising type transactions. I was only just reminded that exactly 10 years ago, I closed my very first Indonesian startup investment. I don't know whether any of you remember this company called Bride Story, which was at the time, I think still is, a wedding e-commerce marketplace. It was a small Series A round led by Global Founders Capital, which was sort of the VC affiliate of Rocket Internet. And Bride Story was eventually acquired by Tokopedia, and sort of became part of Indonesian tech and startup history, as it were. So, one decade later, I'm very pleased that I'm here talking to all of you guys about the exciting tech and VC ecosystem in Indonesia. It's had its ups and downs, sort of from the heady low interest rate days of 21 and 22, that was soon followed by a long and difficult funding winter for some startups as interest rates continued to rise. We've come to what I believe is the culmination of the first funding cycle for Indonesian tech. And, I'm as excited as everybody else to see what happens next.
Wow. So you've been in the business for 20 years, and if I'm
Yeah.
not mistaken, at Withers, you're head of tech and crypto. Correct me if I'm wrong.
So I wear a few hats at Withers. I head the technology and venture capital practice in Asia. We cover three markets: Greater China, Southeast Asia, and Japan. The second hat that I wear is that I head the Withers Indonesia practice. So here we're not confined only to technology. Technology is still very much, central to what I do, but the Indonesian practice is full service. So in the same way that I'm a tech and VC lawyer, we've got specialists in real estate and intellectual property and capital markets and disputes and restructuring and insolvency. So sort of the Indonesian practice is geographically constrained, but sort of full service, if you will, right? Multidisciplinary. The third hat that I wear, and interest in this particular portfolio waxes and wanes depending on who you're talking to and when, is crypto. So I'm one of the three heads of crypto at Withers, and here we deal with everything to do with digital assets and blockchain.
Okay. And just very quickly, what is Withers for the ones who don't know?
So Withers is a global law firm. We're headquartered in London, but we operate out of 17 locations globally. In Asia, our footprint is Singapore, where I'm currently taking this session. We've got about 200 people here. We've got an office in Hong Kong with about 100 people. Tokyo office is about 50 guys, and Jakarta is our newest office, just set up last year. 20 lawyers in the Deutsche Bank building on Bundaran HI. But HQ for us is London, which, sort of is a nice, reference to make, given that this event is supported by UK Indonesia Tech Hub and the British Embassy. So very happy to sort of, make that connection as well. Full service firm. We've been around for 130 years, doing, you know, quite a lot of stuff in the private capital space, but increasingly in technology and venture capital, where where I have a special interest.
Okay, lovely. So as I mentioned, so normally our group is a little bit more is a bit smaller. So
Yeah.
angel investors who are like interested in Indonesia specifically. We do have some angels who are based in the UK,
Yep.
in Qatar, in
Hmm.
the Netherlands, and so on and so
Hmm.
forth.
Hmm.
And a lot of them basically when we ask, so why did you want to join Angel Studio? And then they
Hmm.
basically said, well, I I am interested in Indonesia because I haven't been in Indonesia for quite some time.
Hmm.
But I am now very interested in Indonesia because I do see there is like exponential growth. It's very exciting. There's a
Hmm.
lot of things happening.
Hmm.
But
Hmm.
honestly, for me, Indonesia is a bit of a black box.
Yeah.
So I don't know where to start, who to talk to, what to do. And honestly, a lot of them are just confused when it comes to bureaucracy and the regulation and so on and so forth.
Sure.
So I guess let's start with that. So if, for
Hmm.
instance, I am, let's say for one, an Indonesian who lives abroad and has been living abroad for quite some time,
Yes.
and now I'm interested to, like invest in Indonesia, like where would you, Joel, then say where would be the best way, or what would be the best way to start, so to speak?
Sure. So, firstly, I'd congratulate you on making a good decision. If you want to to start with a report, I mean, the one that I quite often refer people to is the report that Google and Temasek and Bain produced on the Southeast Asian digital economy. The first version of this report was produced in 2016, using 2015 as the benchmark year, and they've been publishing an annual update to this report every year, which and the first report predicted that the Southeast Asian digital economy would grow exponentially, I think, at a compound annual growth rate of 15% to $200 billion by 2020. And of course, that top line number has been revised multiple times, from 200 billion to 240 to 300 to 360 billion, which is incredible, right? Because, how can Google get things so wrong? They've got all the data, but, they've clearly underestimated the opportunity of sort of the tech and digital economy in Southeast Asia. Indonesia was singled out in that first report as being the fastest growing large internet economy in the world. Yeah. And its digital economy in 2015 was only $8 billion. And I think last year it was something like $440 billion, right? So has grown significantly since then. So that's one report that I would look at. The second report is a slightly more sobering report written by none other than Kevin Alui, who was the former CEO of Gojek, in his capacity as a venture partner at Lightspeed Ventures. And in that sort of reflective report, or an introspective report, Kevin reflects on all of the miscalculations that he made when he was at the helm of Gojek. And he says, these are all the things that I got wrong about Indonesia. These are all the things I got wrong about Southeast Asia. Had I known then what I know now, he says, I would have done things differently. One of his greatest miscalculations, by Kevin's own admission, is that he had overestimated the importance of Indonesia for his product, for Gojek, right? Which is basically trading convenience for money. Instead of going out to buy your martabak, you now get like a guy on a motorcycle to send it to you, right? Because as with all services, you need to price them correctly for the market, right? And, outside of perhaps the large urban centers of Jakarta, Surabaya, perhaps Bali, he found that Not many Indonesians living in perhaps rural Indonesia or second and third tier Indonesian cities were prepared to pay as much for these services. So the I suppose counter example he gave, Kevin and Louis, in his report, is that Grab derives 21% of their revenue from Singapore, which accounts for 1% of Southeast Asia's population, and something like 26% of their revenue from Indonesia, which accounts for 35% of Southeast Asia's population. So these two reports, I think, paint quite a different picture of the tech and venture capital scene in Southeast Asia and by extension in Indonesia. The first is a very exuberant report on sort of macros, right? Growing internet economy, rising rates of consumption, growing middle class, young sort of, internet natives. And the second, sort of report by Kevin and Louis seeks to perhaps rationalize or explain the rapid growth in Indonesia's digital economy, and how that hasn't produced the a corresponding level of financial success for the investors into Indonesian tech. So both good places to start if you wanted to better understand the Indonesian digital economy. Now, to your question, Finn, about, Indonesian bureaucracy and laws and so on, I think far more qualified men than I have tried to figure it out and have spent more time trying to figure it out. So, unless you were deeply passionate about studying, sort of the ins and outs of Indonesian law, I would say that as an investor, certainly as an angel investor, the thing to know that, is that Indonesian law is, well, quite different from, I mean, this is a panel supported by the UK. So it's a civil law jurisdiction as compared to the UK, which is a common law jurisdiction. But, if you're an Indonesian diaspora, then you will have sort of grown up in the Indonesian sort of legal traditions. But the short answer to your question is leave the legals to the lawyers, right? That's what we're here for. Angel investment isn't something that's super, as an angel investor, the terms of your investment are not usually extensively negotiated. You might be coming in, first money might be a safe, which, as you know, is not a negotiated document. Very often that investment comes,
Sorry, Joe,
yes.
before we move on, what is a safe?
So
Maybe people don't know what is a safe.
good. So a SAFE is an acronym for a simple agreement for future equity. It's an instrument that was popularized by Y Combinator, and it basically means you give a company money and the company is under no obligation to return it, but instead, when the company raises a priced equity round, the company converts your investment into equity. If the company is sold or becomes bankrupt before it raises an equity round, then you as a safe holder have a right to, some of the sale proceeds or liquidation proceeds. But the good thing about the safe is that it's a 3-page document. It's not negotiated, which means you're not spending money, or the company isn't spending money on lawyers in the very early phases of its life cycle. It's designed to be a self-help document. So if you went to Y Combinator's website today and you downloaded the safe, right at the top, it'll say, this is the safe that I've downloaded from the Y Combinator website. I've made no changes to it except to fill in the investment amount and the discount rate and the valuation cap, right? So it's a simple document, as the name implies, and really the most easy point of entry for a foreign investor. Now, one caveat, though, is that safes tend not to work well with Indonesian companies for
Why so?
no other reason than I think Indonesian accounting rules have not quite figured out what a safe is, right? In Indonesia, if I was an Indonesian accountant looking at a safe, well, it's not a debt instrument because there isn't a repayment obligation. It's not an equity instrument because you're not receiving any shares. How do I treat it for accounting purposes? So the nearest jurisdiction where a safe might be used would be Singapore. Now, it's worth mentioning Singapore here because Singapore, as many of you on this in this session will know, is the largest investor in Indonesia. Now, let's not pretend for a minute that Singapore is an origin of investments. Singapore is a rock 50 kilometers from end to end at the southern tip of the Malay Peninsula. Indonesia is the largest archipelago country in the world, spreading the distance from London to Tajikistan, right? Singapore is a conduit of investments into Indonesia, much of which Indonesian investments. Okay, so the money makes a round trip through a Singapore holding structure back into Indonesia. There's various reasons for this. One of those, to your point earlier, Finn, about sort of Indonesian bureaucracy and transparency and the strength of its legal institutions and rule of law. Singapore has a rightly or wrongly, a better reputation as a finance center. Singapore's institutions like our courts and our arbitration centers are well respected. The court processes, arbitration processes are transparent. And, you know, Singapore law is very often used in cross-border investments, right? Indonesia is still seen as a high-risk jurisdiction. And what happens, you know, when investors encounter risk is they simply price it into the deal, right? Which means that if you insisted on using an, you know, sort of fundraising from an Indonesian company, you might be forced to offer a discount. Yeah. But, you know, Singapore and Indonesia has had for a long time now this complementary relationship to each other, right? And you know, what, again, simply because this is a session that's sponsored by the British government, you know, Singapore is a common law jurisdiction, much like the UK, and in fact had inherited our current legal structures from the UK. So for those of you on this call who are familiar with, you know, the English common law, Singapore will be a very sort of familiar jurisdiction to you and your lawyers.
Joel, I mean, you personally, besides being a lawyer, you're also an angel to a certain extent,
I am
right?
indeed.
So you have also invested in Indonesia. So maybe let's let's look at it that way as well. I
Yep.
mean, you personally, as an angel investor who is not Indonesian, like
Yes.
what drew you to invest in Indonesia? That's number one.
Yep.
And secondly, like what were the challenges that you faced?
That's a good question. You know, lots of people, I'm a much less prolific investor than you might think, Finn. I know that you're an angel investor also, and you know, sort of we've seen each other's names on cap tables, but people ask me all the time, "Oh, Joe, you do 100 VC deals a year. Surely you must be in on all the, you know, you must be on all of the good deals, right?" And I said, "Well, not so, because you know, as a lawyer on deals, very often you're conflicted, right? You can't do those deals because if Joel Shen had a personal financial interest in the outcome of a transaction, then you know, am I the best guy to advise on the transaction, right? So I don't usually you know, sort of invest on deals on which I'm advising. Very often, the angel investment that I do is a co-investment with friends. So, for example, if I knew a founder in from a previous transaction who had exited, I might invest in his next startup, right? Some years ago, a few friends and I came together and said, "Look, you know, why don't we club together and put together a sum of money, not enough to keep us up at night. And if we pissed it all away, we would still continue to be friends after. And let's write small checks to founders that we like, right, and believe in. And these are not deals, you know, where I would ever be appointed as a lawyer. And, you know, that's turned out, you know, reasonably well, and we've made some money. Sometimes I co-invest with VCs that I know, right? But, you know, for a lawyer, it's not always easy. So when somebody comes and asks me, "Oh, Joe, you know, what do you invest in?" You know, very often my answer, and it's quite an honest answer, is, "Oh, I only invest in things that don't make money." Because things that I know, you know, that will make money, I'm probably already conflicted from
I'm
it.
not an expert, but that's not the best strategy.
No, it's not. No, it's not. Which is why it's sort of, you know, I'm very happy to let the professionals make my investment decisions for me. This is one of the reasons for this probably is also because, you know, lawyers make terrible businessmen and investors. Finn, I must have mentioned this to you on more than one occasion now, but lawyers, I think, are trained to focus on remote but catastrophic risk, right? So what are the things that could possibly go wrong? However unlikely these outcomes might be. Whereas I think for an investor and an effective entrepreneur, you need to have an appetite, a risk appetite, right? Why are you making money otherwise? Because you're taking a risk on capital, because you're taking a risk on, on innovation. So I think lawyers are just, it's not in our DNA to take risks with money, right? So much easier if I gave the money to somebody else to invest on my behalf and pay him the 2% management fee and 20% carried interest.
Okay, but as you mentioned, I mean, there are quite a few challenges when it comes to
Yes.
bureaucracy, accounting, and the law
Mm-hmm.
that Indonesia
Mm-hmm.
uses, so on and so forth. But still, yet you decided, hey, you know what? Indonesia has a lot to offer. I want to join in on the fun.
Yeah.
So I guess maybe the question is so that maybe, it can give some clarity to some of our audiences here as
Yes.
well. Like, what drew you to still invest in Indonesia, knowing all of the things that you know?
Oh, well, simply because of the tremendous opportunity in the market, right? I mean, Indonesia's sort of all of the macros are going for it. It's the world's fourth most populous country. It's the only Southeast Asian economy in the G20, according to that Google and Temasek and Bain report. It's the fastest growing large internet economy in the world. It's the largest producer of many commodities grown or dug out of its rich earth. It's expected to be the third largest contributor to the middle class globally over the next decade, right? Yes, I mean, of course, there is, sort of a bit of gloom and doom in the news today about Indonesia's shrinking middle class and falling wages and rising unemployment as a result, of sort of cheap imports from China and so on. But, I think in the long term, sort of economic prospects in Indonesia are bright, right? Compared to many of the other jurisdictions in which I operate. I mean, as I mentioned, with us as a UK firm, you know, if we're sort of pessimistic in Indonesia saying, oh, are we going to get to 5.5 or 5.4% GDP growth this year? I mean, if people in London heard 5.5%, they're all rushing to get back on the plane with me to Jakarta, right? Singapore, likewise, right? Singapore will always be constrained by our size and lack of natural resources. I mean, we've got a good geographical location and a deep water port, but that's about it, where 3.5 million Singaporeans, if you included all of the itinerant workers in Singapore, were just over 6 million, right? So very often when I speak to Indonesians, they're very surprised to learn that there's only 3.5 million Singaporeans in the world, right? They all laugh at me and say, that's not even the population of Tangerang. They say it's the population of South Tangerang. So, comparing the size of the markets, the opportunities between Singapore and Indonesia, and of course, entrepreneurialism is something that's baked into the Indonesian DNA, I think. If you talk to even professionals, right? I've now worked in the Indonesian market for more than a decade, and everyone I talk to has got a side hustle somewhere, right? Yes, his day job is being a lawyer, but he's also, got a little cosmetics company on the side. He's got some money riding in a friend's business. He does a little bit of freelance photography on weekends. Everyone's got a side hustle. Singapore, not so. If you, and the example I always give is the stock exchange of a country tells the story of the entrepreneurial class in that country, right? And if you look at the Indonesian Stock Exchange, you'll see, and rightly so, that it's represented by all of the, you know, people and families who have come and made their money in Indonesia, right? Whether it's from natural resources or agriculture or property development or financial services. If you look at the Singapore Stock Exchange, it's a bunch of government-linked companies, right? It's Sembcorp and Keppel and CapitaLand and Singtel and Singapore Airlines and the Changi Airport and the telecommunications companies, and these are all Temasek subsidiaries. So I think if I were sort of dividing my time between Singapore and Indonesia and wanted to put a little bit of my personal money on on a business or to back a founder and wanted to bet on growth, I think Indonesia is where I'd bet on that growth rather than Singapore.
And I think you already mentioned safes earlier.
Yes.
But besides safes, like what opportunities do Indonesians who are non-Indonesian tax residents or foreign tax residents, let's put it that way, and also foreigners in general, like what options do they have to invest in Indonesia basically besides
Sure.
safe? I assume
Sure.
loans are a possibility, or
Yep. So besides, says the two, I guess, more popular forms of investments would either be a convertible note. So a convertible note is conceptually quite similar to a safe, except that sort of with one key difference, which is that a note is a debt instrument and therefore is repayable. So a note has a maturity period. It's got especially if you're investing in Indonesia, it attracts interest. So as an investor, you start off as a creditor of the company in which you invest, right? And then the idea behind a note, as in the safe, is when the company does its first priced equity round, the note then converts um, into equity, right? And usually because the money, you put the first money in, that conversion happens at a discount to the price round. The third is straight equity, right? So you would, purchase shares in the company, you would subscribe for shares in the company. And this means that, you and the company will have to agree on a certain number of shares that you receive for every dollar that you put in. And for this reason, equity rounds are also called priced rounds, right? Because the price is fixed, the valuation of the company is fixed. So these are the three most common forms of investment for investors into early stage companies. The first money in usually takes the form of a safe because, as I said, designed to be self-help. You don't need to hire lawyers. If a company is raising $100,000, $200,000, do they really want to spend any legal fees? As a lawyer of 20 years, let me tell you the answer is no. Sometimes in Indonesia, the first money in takes the form of a convertible note because safes, as I said, are not. Have I seen Indonesian safes? Yes, but um, uh, I've also sat in on some awkward conversations with Indonesian auditors. So safes tend not to be the preference, at least for savvy investors who make direct investments in Indonesia. So sometimes it takes the form of a convertible note, right? I give you $100,000 today. And when you do your priced equity round, it converts at a discount to the future valuation. If the company is sold, if the company becomes bankrupt, then I'm effectively an unsecured creditor of the company, right? And the third, of course, is I take shares in the company, in which case I'm a shareholder of the company.
okay. And let's maybe switch it around. So basically, we talked about foreigners investing in Indonesia,
Yes.
but what about Indonesians investing abroad? I mean, for you specifically, you have experience in Singapore, obviously, also in the UK. So I don't know if there are some Indonesians here who are interested in investing abroad, but maybe if they are interested, like maybe what simple advice could you give them on where to start and how to start, basically?
Well, I think as an angel investor, well, certainly my experience as an angel investor is that investing for me is very contextual, right? It's where I was at the time, it's who I met, it's how I, was pitched to, it's, sort of, so an angel investment for me usually happens in my immediate vicinity. It usually happens because the deal was brought by someone that I know. Um, whether that person is a founder or an investor. So, I'm not going around with a sort of giant world map on my table, plotting world domination and saying, well, I'm going to invest in Uzbekistan because there's this opportunity. So for me, it's very contextual. So rather than let the tail wag the dog, right, and say, oh, where would you invest and what would you look out for? I think, wherever it is you are in the world, I think, as an angel investor, the tendency is to be alive to to the opportunities around you, right? And the minute you sort of publicize the fact that you're an angel investor and an investor of any description, you're bound to have people cold calling you, knocking on your door, right? So one of the skills you very quickly develop as an angel investor is you develop that lens through which you evaluate your investments, right? And if you get burnt a few times and lose a bit of money, but you develop that acumen quite early on in your career as an angel investor.
Well,
The
just
next
a question. Is it a rite of passage as an investor that you have to lose some money?
I think it's inevitable, isn't it? I think it's inevitable. I was moderating a roundtable yesterday of investors, and one of the speakers at the one of the participants in the roundtable was a former head of investments at GIC, Singapore Sovereign Wealth Fund, and he says to me, our principle at GIC is to invest all the time, right? Across vintages. We never try and time the market. We never try and catch a falling knife. We never try and go in when we think the price is lowest, because whenever we try and do that, we always get it wrong. So we invest every year. We invest across, we invest globally, we invest across different sectors, but we invest consistently. And that's how over time they managed to build up, sort of their portfolio. And I think that's good advice, right? So I mean, as an angel investor, you're not going to be quite as rigorous an investor as a sovereign wealth fund, but to invest regularly. Now, I'm not saying to put all of your money into startup investments. In fact, I'm a big believer of a diversified portfolio. So, if venture capital is an asset class in your portfolio of startups and emerging companies as an asset class in your portfolio, then you certainly want your portfolio to comprise of things other than startup shares, right? So, in addition to this safe note for $100,000 or whatever it is, you want to have some blue chip equities in there, fixed income products, right? You want to have maybe some real estate in there. So a diversified portfolio is a healthy portfolio, I think.
Lovely. And have you done anything in Singapore or in the UK? Not as a lawyer, but as an investor?
As an investor, yeah, sure. Not in the UK yet, because as I said, contextual, right? So even though the firm is headquartered in the UK and I file UK tax returns, um, I I just don't have my finger on the pulse, or I'm not close enough to the UK startups to be an active investor, right? And no one has yet brought me well, no one has yet brought me a UK deal, although sort of some of the money managers that I park money with have done UK transactions before. So I have some indirect exposure to UK, but Joel Shen has never said, well, I'm going to do a UK deal, write a check to a UK company. I've not done that yet.
And like, because you've been mostly talking about venture capital and also about
Yeah.
startups, right?
Yeah.
I think in Indonesia, I don't know for our audience if they're aware, but in Indonesia, we've had some troubled times recently
Mm-hmm.
with
Mm-hmm.
some of our startups.
Yeah.
Um, and I guess for some investors, also the risk perception has just
Yeah.
increased
That's
tremendously
right.
when it comes to
That's
startup,
right.
Indonesian startups in
That's
particular.
right.
Um, I guess there there's a second part to this question, but let's
Mm-hmm.
start with that first.
Mm-hmm.
I mean, have you also encountered that, especially for foreign investors interested in Asia, that
Mm-hmm.
their risk perception has just increased exponentially? And like, has that become a problem for you as a lawyer, basically?
Sure, sure. So I'll start by saying that hasn't become a problem for me as a lawyer, because, when lawyers do deals, we make money, and when startups fail and there's fraud, we also make money. So, the legal practice is both cyclical and counter-cyclical, right? So let's get that out of the way. Now, there has been a lot of news about, companies that have failed. E-fishery you hear about every day, companies like Investry you hear about every day. But as a tech and VC lawyer, the greatest concern among investors is, would you believe it, not fraud, right? Um, Even upper quartile VCs have a business failure rate of about 30%, which means if I was one of the top performing VCs in the world, about a third of my portfolio would still fail, right? In terms of body count, in terms of body count, in terms of funds written down, in terms of investments written down, about 10%, because, I suppose one of the qualities of a good VC is to know when a business is failing and not throw good money after bad, right? So to see some of their companies in the portfolio fail, I think is not is not a is not a catastrophic outcome for a VC. It's not an unmitigated disaster for a VC, right? And fraud, yes, there have been some high-profile examples of fraud in Indonesia, but fraud happens everywhere at every stage of a company's life cycle. You know, some of the largest frauds in the world were perpetrated in advanced tech ecosystems, Theranos, for example. Some of the largest frauds in the world were perpetrated by very mature companies, right? Um, Wirecard, Enron, Barings Bank, you know, so fraud happens everywhere. And even as a person whose job it is to sort of, you know, look out for fraud on behalf of my clients, it's very difficult to guard against a determined fraudster, right? Um, so that's the first. But the real, I think, reason, or one of the main reasons why Indonesia has been, or why investors have been less enthusiastic about Indonesia lately? Well, there are two. The first is, yes, interest in Indonesia is waning, but that's also because it's coming down from from high, right? The second is Indonesia just hasn't done a fantastic job of returning capital to investors, right?
Hmm.
So we went through that funding cycle, you know, valuations picked up, more money came in, and then, you know, we had the culmination at the end of the funding cycle. We had some exits, but you know, none of the exits are doing extraordinarily well, right? Tokopedia and Gojek, who are seen as, you know, some of the barometers of the health of the Indonesian tech industry, famously merged um, in the largest merger in Indonesian history for $40 billion, right? And just last year, GoTo, which was the merged entity, sold the Tokopedia business to TikTok for $1 billion and change. So, you know, it's not been a you know, sort of a runaway success. I think Indonesia's problem is that the final chapter of its story has not yet been written, right? You know, we sort of, but let me tell you, sort of having seen you know, having sort of closely looked at every step of the last funding cycle, at first, people said that Indonesia would not produce any innovation, right? We're all just copycats. You know, Gojek is simply a copycat of Uber, you know, adapted for local circumstances. And then we proved them wrong, right? And then after that, people said, well, you know, Indonesia would never bridge the Series B funding gap. I don't know whether you remember that. But yes, lots of people writing small checks. You know, East Ventures Fund 1 was famously $2.2 million, right? And Wilson Chua wrote 22 checks of $100,000 to, you know, 22 companies. And two of them just turned out to be Tokopedia and Traveloka. Somebody should ask Wilson who the other 20 checks were made out to. But, you know, and then people were concerned that there was no one writing checks of 10 to $50 million, right? And of course, that changed when new funds, larger funds started coming up. And then people said, oh, you know, big foreign tech players are just going to come and buy out everyone, right? That never happened. You know, Grab bought Uber, not the other way around, right? And then they said, oh, you know, Indonesia will never deliver any exits. And then, of course, we had the mergers, you know, Grab de-SPACed on NASDAQ, GoTo listed on the IDX, Bukalapak went an IPO thereafter. So we had the exits. And now they're saying, oh, you know, sort of big tech will stifle innovation. And again, we've not seen that, right? So I think we're sort of at the tail end of the story, but I think, or at least I'm hopeful, that the final chapter has yet to be written, right? And I think once the chapter is in place and when, you know, GoTo share price rises above 50 rupiah, which it currently is today.
Amen.
Yeah, amen, exactly. And investors start getting some distributions on their invested capital. I think that will then encourage, you know, a new generation of, I mean, already the Indonesian tech and VC ecosystem has produced a whole generation of dreamers and entrepreneurs, right? Inspired by the likes of Nadiem Makarim and William Tanuwijaya to build innovation for Indonesia. So I'm hopeful that in the coming years, Indonesian tech and VC ecosystem will inspire a generation of investors who have, sort of enjoyed early success in the first funding cycle of Indonesia. Is that going to come next year, next 3 years? Don't trust the lawyer's prediction on this, but I'm hopeful that it will come. I think it was your former trade minister, Khatib Basri, who famously said, Indonesia always disappoints. It disappoints the optimists, but it disappoints the pessimists also, right? So I'm hopeful that Indonesia, the final chapter has not yet been written, and once it has been written, then the story will be complete, and we'll sort of witness the start of the next funding cycle.
Lovely. And last question, because before we move on to the next part of this event today.
Yes.
Um, so the unique part about Angel Studios, when we started this, we wanted to find out, okay, what are the funding mechanism options that
Yes.
our investors will have?
Hmm.
And also where to invest, right?
Mm-hmm.
So we did look at startups, but as we already mentioned at length just now, that startups, they do have quite a few challenges.
Mm-hmm.
Um, and then we actually looked at small and medium enterprises.
Mm-hmm.
And yeah, we actually are seeing a lot of diamonds in the rough.
Yep.
And I guess the main difference, correct me if I'm wrong, between
Yep.
startups and small and medium enterprises is that
Mm-hmm.
startups, they basically go for growth as
Yep.
much as possible. Not so much anymore now,
Yep.
but in the past, they definitely very aggressively pursued growth at all costs, corner the market, and then once you have a monopoly, you can set any prices that you want, right?
Yep.
Um, but not all of them manage to become
Mm-hmm.
profitable at
Mm-hmm.
all.
Mm-hmm.
Goto, case in point.
Mm-hmm.
Uh, but then small and medium enterprises from day one, they kind
Yep.
of go for profitability.
Yep.
And normally they grow because demand just outstrips supply, basically.
Yep.
So my question to you is, have you seen that in your clients as well, that some of them are sort of, like pivoting or at least looking at small and medium enterprises, or I guess real businesses instead of startups? Is that something? Is that a trend that's happening?
Yes. Yes is the answer. I think the reality is that there still remains a large amount of dry powder in the region, which means that fund managers have raised, large amounts of capital that they have yet to deploy, right? So this money needs to be spent. Now, if people aren't investing into startups anymore, and as you said rightly, Finn, there was a time when interest rates were low and money was cheap, and people were saying to startups, go and grow at all costs, right? Blitz scaling. I want you to become the largest in the industry, and when all your competitors are gone, you have a monopoly on the market and you can charge whatever price you want, right? For a Gojek ride, for a food delivery service, you know, when you're the only player in the market. That hasn't happened. And if you read Kevin and Louis' report, one of his reasons for that is that he had rather overestimated the size of the market, right? Indonesia is a country of 280 million people. It's not a market of 280 million people for Gojek, right? It might be a market of 28 million people, 35 million people for Gojek, but certainly not 280. Um, so if so one of the things that we saw during the funding winter was investors being putting a lot more pressure on startups to right size. So you saw, the very, sort of quite sad retrenchments and layoffs by tech companies, very difficult. Obviously, many of my clients were founders at the time, and this was a difficult season for them. You saw a sort of change in business attitudes, right? Because before that, startups were highly experimental. If this doesn't work, let's try this other thing instead. If this doesn't work, let's try this other thing. And then investors were saying, look, there is no money for experimenting anymore, right? Stop everything that you're doing now that is not core to your business and focus only on the core, right? There was a complete shift in attitudes towards profitability because as a startup, you're not expected to be profitable from day one. You're not expected to pay a dividend to your investors. It's a capital appreciation play, right? Rather than a dividend play. But because interest rates became higher and money was more difficult to come by, investors then encourage their startups to become default alive, right? So if you assume that you wouldn't be able to fundraise for the next 6, 12, 18 months, you're going to have to be cash flow positive, at least, survive. Your business needs to survive based on, um, uh, on its own earnings, right? So those attitudes shifted. And as investors got, I suppose, burned on tech, and sort of appetite for tech was a bit reduced. They started turning to other things that might make money, right? And in Indonesia, consumer goods is a good example. If you look at all of the big conglomerates in Indonesia today, many of them made money by selling a 10-cent product to a market of 100 million users, right? Whether that 10-cent product is instant noodles or bottled water or cigarettes, that's how people make money. So, investors turn towards consumer goods, they turn towards F&B is a difficult play, but there are very successful F&B business. Well, successful, I think, remains to be seen, but there certainly are very well-funded F&B businesses, right? Sort of Kopi Kenangan and Flash Coffee and all of those. Um, I never understood the business model, Finn, but people who have invested in these companies will be able to explain it much more eloquently than I. Because for me, F&B is you're never going to see the consumer goods is brand, right? I mean, you can sell as many sort of lipsticks as you're not really constrained in the number of consumer goods that you sell. But F&B is a brick and mortar business, right? And there tends to be, I mean, if I was a sushi restaurant, for example, I can only make more money by selling more sushi, opening more restaurants, putting more bums in seats and so on. So there tends to be quite a linear correlation between cost and revenues. So, would an investment like that be super exciting to a VC? I'm not saying it's a bad business. I might invest in it, right? If you tell me that I'm investing in a business that's highly cash generative and pays dividends every quarter, why not, right? But would a VC get super excited about it? I mean, VCs aren't, I mean, they don't invest like that, right? I mean, they're after that sort of hockey stick growth where you're, that the power theory, they call it, where most of the companies in your portfolio don't do well, but two companies, have home runs and 100x, 100x your investment, right? And therefore 10x the fund. So it's not how VCs invest. Now, you might not agree with how VCs invest. I know many people don't. I know many people are, sort of having their day now saying, oh, VCs have pissed all of this LP money away, and what are they doing about it? But I think they misunderstand entirely the whole idea of a VC. I think, and maybe this is because I've drunk the Kool-Aid as a tech and VC lawyer, I think it's great to be in an economy where investors would take a chance on moonshots, right? I think it's great that, a startup can raise $50 million to build something with a 1 in 10 chance of success. I think that's great for innovation. I think it's great for the economy. I think it's great for, sort of improvement of human capital, technological advancement, right? Many of the things that we take for granted today would only exist, these inventions, because people, investors were prepared to take a punt on something that was untested before. What I think, where I think the misunderstanding happens is if you put all of your money in a high risk investment, then I think you've misunderstood the idea of what venture capital is, right? It's meant to be a small portion of, they say now that 100 VCs are in the market to raise 10 billion US dollars. Yeah. And they managed to raise about 2. That's how bearish people are on the Southeast Asian economy. But to put things in perspective, the total AUM for the fund management industry in Singapore is 4 trillion US dollars, right? So that gives you an idea of what the allocation is into venture capital. So if you sort of extrapolated that into your own investment portfolio, and if you had 100 to invest, you might not even put 1 in VC, right? You might put like sort of a fraction of 1 into VC, and the rest of it would be in much safer investments. Now, it makes for great it makes for great reading. It's very entertaining to read about, sort of the successes and failures of other people. And that's why, Tech in Asia and Deal Street Asia have a thriving business, right? Pandering to their readership. But I think, you do need to start with sort of a basic understanding of what it is a VC is trying to do, right? And how they invest.
I completely agree. Um, Joel, like how much time do you still have? Do you have to go like very soon?
I've got a call at half 4, but I can speak until then.
Okay. Because it was a request from one of our angels in the Netherlands
Yes,
basically to go through a dummy contract,
the term sheet.
just
Yes.
to sort of quickly point out from your perspective of, what things to watch out for, basically.
Okay, great. So I'm going to talk at length and quite quickly for the next 25 minutes. Okay, so bear with me. Now, this is a contract for an equity round. Most of the time, if all of us are angels, we would not typically be leading an equity round. First money in, as I said, tends to be safe. In the Indonesian context, sometimes it's a note. The first equity round is usually institutionally led. Not always, but usually institutionally led, right? Now, the good news is that all across the world, we're seeing a convergence in deal terms, right? Uh, a similar thing happened in the banking industry, a few decades ago. And if today you or I walked into a bank, Finn, to take a home loan or a small business loan, the bank would say, well, sign at the bottom of this loan agreement. And by the time the ink is dry on the document, the money will be in your bank account, right? So unless your name is Elon Musk or Mark Zuckerberg, the bank is not going to, negotiate a bespoke loan agreement for you. So too are we witnessing something similar in the venture capital industry. Because of this, and you will know as well as I do that all the banks have sort of similar form loan agreements because they all use an industry form, right? Because of this, venture capital associations all across the world are publishing model form agreements, trying to consolidate, sort of what they see happening in the market, right? The trend started, as innovation often does, in the US many years ago when the US National Venture Capital Association first published their model form agreements. Later, the BVCA, because this is a sort of a British crowd, published its model form agreements. In 2018, the Singapore Venture Capital and Private Equity Association published a set of model form agreements called VIMA, one of whose documents you see today. I was on the VIMA working group. Let me tell you, this is a labor of love. Documents took 2 years to draft. 10 law firms worked on it. We invited contributions from startups, from founders, from VCs. We, invited contributions from the Singapore Law Society and the Academy of Law. All of that, process culminated in a set of documents called VIMA, and today we're running through the VIMA term sheet. Why is the VIMA term sheet relevant for this audience? Because, as I said, many of the deals in Indonesia are structured through Singapore, right? And certainly most of the Indonesian venture-backed companies will be funded through Singapore holding structures. Is it always the case? No, but 90%, I think. I'll let you all in on a secret simply because you're good friends of Finn's and members also of Angel Studio. We have got a project on now with Ambesindo, which is the Indonesian Venture Capital and Startup Association, where we're developing with us a set of model form agreements for Ambesindo. So akan datang, as they say, right? You will be the first to know when these are ready. Now, so the model form agreement is not intended to be, set in stone. It's not the gospel truth. Parties are free to negotiate. They're free to deviate from its terms. But because they are reflective of industry standards, it brings parties much closer when they start negotiating, right? And very often, if a party wishes to suggest a deviation from industry terms, then it falls on that party to explain why they need to deviate from industry terms, right? So without further ado, let's whiz through the term sheet. You can sort of take us right to page 3, I think, where the terms start, right? So pass the explanatory note, pass. Okay, right, stop here. So what is a term sheet? A term sheet, for the uninitiated, is a non-binding legal agreement, right? It sets out a summary of the indicative terms of the deal, okay? And it's basically an expression of interest by an investor that these are the terms on which I want to invest in a company. A term sheet is subject to negotiation. A term sheet is subject to due diligence. A term sheet is subject to finalization of full form definitive documents. But by and large, all of the stuff that you see in a term sheet, not legally binding. I say well, not all of the stuff, most of the stuff. There are some clauses that are legally binding in a term sheet. Number one, exclusivity is binding, right? When an investor decides to hire lawyers and conduct due diligence in the company, he wants, you know, the startup not to take his term sheet and go and shop somewhere else, right? So for a period of time, you are negotiating exclusively with the investor, and likewise, you know, the investor should not also be shopping around and talking to competitors of the startups, of the startup. Number two, confidentiality is binding. So, you know, if I'm going to open a data room for you and show you my books, please don't take this information and share it with anybody else. Number three, all of the boring boilerplates at the end of the term sheet that make a contract are legally binding. So these are all the boring things like governing law clauses and disputes clauses and counterparts clauses and so on. Nothing that the average person would be interested in, but things in which sort of legal geeks like me take a very keen interest. Okay, so if we move down sort of half a page, you see the first bit here. There you go. Quite straightforward. How much are you you know, if I took you through all of the fields, number one, amount to be raised, how much are you raising? Number two, percentage of ownership, right? This is a priced equity round, as I said. So how many shares am I getting in the company for this amount, right? That translates into field number 3, which is how much am I paying per share? Anticipated date of completion. This is always, you know, people always underestimate the complexity of a deal, especially when they ask their lawyers to provide fee estimates. Oh, it's a simple deal, very quick, very friendly, it'll be done in 2 weeks. Never done in 2 weeks, right? Field number 5 is who the founders are. Field number 6 is important, right? This is what the company is allowed to use the money for. So the money isn't there to buy, you know, a nice flashy car for the founders to drive around in. Very often this will specify that the money is for working capital requirements, or it's to be spent in accordance with an agreed business plan, right? And the business plan can include details, for example, of, you know, new businesses that the company wants to enter into, new markets that the company wants to expand into. Exclusivity was what I shared about earlier, which says, you know, which talks about, you know, both parties to the term sheet not shopping around after that, right? So if you imagine that sort of investing into a company is like a marriage, then a term sheet really is like the engagement before that, right? If I could go down to the next, yep. So confidentiality, I mentioned that earlier, non-binding, as I said, you know, so other than exclusivity, confidentiality, and all of these boilerplate clauses, the term sheet is technically not a binding document. Other rights and privileges, this is quite interesting. Very often, investors will ask, this is what's called the most favored nation clause, right? And will ask to enjoy rights and privileges that are not, you know, less than what existing investors already enjoy. 11 is an interesting one. Investors don't like to pay for their own lawyers. Very often they ask the startups to pay their legal expenses. Startups will then come back and say, well, please, can you ask your lawyer to cap his fees at a certain amount, right? Could we scroll down further? Okay, so that was basically the term sheet. Now we talk about the indicative terms that will make their way into the definitive agreements. Number one, dividends. Quite a boring thing. Nobody spends too much time talking about this. As I said, startups, emerging companies are not really expected to declare and pay any dividends in the early phases of of their life cycles, right? So, you know, yes, people write it into the term sheet, but very often no one pays a lot of attention to it. Liquidation preference is interesting, and this concept of liquidation preference, I think, might take a bit of time to explain because it all starts because startups are valued in a way that is much less objective, shall I say. All of the traditional methods of valuing companies, I think, are it's difficult to apply those standards to a startup, right? You might be talking about a company that has an MVP, but not any real customers. You might be talking about a company that has, a handful of customers, but not yet any sort of significant recurring revenue. You might be talking about a company, depending on where you are in the innovation cycle, just a bright idea, not yet tested, right? So there are very few data points for the VC to do its financial modeling. So very often the valuation of a company is, I don't want to say finger in the air, but it's a much less rigorous exercise, right? Valuing a startup than a much more mature business with many more data points. And for this reason, people have a liquidation preference clause. Why? Because let's just assume for a minute that I'm investing $2 million in a startup at a pre-money valuation of $4 million, right? What this means is I will get 20% of the startup, correct? Because oh, sorry, not $2 million. So, well, $2 million in a startup that with a pre-money valuation of $8 million. So that means post deal I get 20% of the startup. But what is it that tells me the startup is worth $8 million? It's just sort of my best guess, right? Based on the information that I have. But hey, guess what? When I put $2 million into the bank account of the startup, regardless of what the pre-money valuation of the startup is, the startup is at least today worth $2 million, right? And if the founder were to distribute all of that money, I only get $400,000, right? And he takes, $1.6 million and he rides off into the sunset. So the liquidation preference here is I'm not suggesting that anyone will behave that way, but liquidation preference here is to protect the investor so that, in the event of a liquidation, investor takes back higher of the amount that I put in or my pro rata proceeds of a sale or a distribution. Yeah. Voting rights is, again, in this part of the world, the expectation is that investor shares carry similar voting rights to founder shares or ordinary shares. Conversion isn't something that people really talk about. There is, just bear in mind that there is a concept of converting investor shares into ordinary shares, but given that we have limited time, not something that we want to dwell too much on in this session. 16, anti-dilution is quite interesting. Anti-dilution is something that we see specifically in VC deals, and anti-dilution protects the investor in the event of a down round. So let's say, again, using my example, I had invested $2 million in a company with a pre-money valuation of $8 million. I got 20% of the shares in the company. Now, if the company then goes on to raise money at a pre-money valuation of $4 million, what does that mean? Or $5 million? It means that my investment value will have halved effectively, right? Because the valuation of the company will have been reduced. Now, here the anti-dilution provision kicks in so that the investor, get a free top-up of shares in a down round so that the value of my investment is preserved. So because of the free shares that I get, I now hold more shares in a company that is worth less so that my increased stake in a devalued company is worth the same as my stake before the down round. Okay? Conditions precedent, again, a fairly common thing for startups. One of the things that you'll do as an investor is you'll commission a due diligence exercise, right? So the lawyers will go and conduct due diligence on the company. Investing into a company, I always say, is like buying a second-hand car. Okay, because there is this information asymmetry between the startup and the investor. Startup and the founders know everything there is to know about the company. Investor knows nothing about the company, right? So what you do when you buy a second-hand car is you take it to your workshop and you get a trusted mechanic to look under the hood and to say, well, this is okay, it's running all right. You do a few checks. That's the due diligence process, right? Now, if the mechanic finds that there's anything wrong with the car, what the buyer might say to the seller, before I buy your car, I want you to fix all of these things. before I buy your car, right? So your headlamp is broken, please go and fix that. The seatbelt doesn't work, please go and change a new one. I see that your car is empty of oil, please can you top up engine oil, right? So all of these things that happen before the sale are called conditions precedent. So similarly, when a lawyer goes and looks into a startup and identifies anything that is, you know, and let's be honest, startups very often are terrible at housekeeping, right? Especially in the early phases, because, well, just because, the management team might be less experienced. They might have, they might not be able to afford sort of the best service providers. They might cut corners. They might simply not be as familiar with the laws or regulations. So there are bound to be certain, adverse findings in a due diligence exercise. So very often what we'll do is we'll ask the startups or the founders to resolve all of these adverse findings before the investor puts their money in. Number 18, representations and warranties. Using, again, the example of buying a second-hand car, representations and warranties, as with conditions precedent, try and address that information asymmetry, right? Startups and founders know everything about the business. Investor knows nothing about the business. So I will ask the startups and the founders to give me a bunch of representations and warranties. Yes, this car, this was when I purchased the car in 2007. I've not been involved in an accident. I've paid all of my insurance premiums on time. I have, taken the car in for servicing on an annual basis to an official mechanic, right? A licensed mechanic. So all of those things I write down on a piece of paper and I present them to the investor. If any of those things turn out not to be true, and the investor suffers a loss, then technically an investor has a right to sue the warrantor. In this case, it could be the company, it could be a founder, to make the investor whole for that loss, right? So if you tell me that your car has never been involved in an accident and you brought it in for servicing on an annual basis, and the minute I drive the car out of the workshop, the wheel falls off and it's discovered that it was because of a previous accident that was not fixed, right? Now, if I suffer, any damage as a result, hospital bills, etc., technically I would be able to sue the warrantor who made that warranty to me. Yeah. Could we scroll down a little bit further? Employee share option scheme is interesting, right? Startups very often use ESOPs as a means of incentivizing and retaining employees. Investors don't like to take the dilution on an ESOP. So what they will say to the startup is, you set up an ESOP, and this will be, it could be 10%, 15%. And when I come in, I'm not diluted by the ESOP, right? Board of directors, there is sometimes a misconception that investors are out to control the company. That's not the case. Very often investors will ask for some representation on the board of directors, but they're not, at least institutional investors, in the habit of giving a startup money and then having to run the startup as well, right? So the idea is for somebody else, the founders, to run the startup. Why do the investors then need directors on the board? Well, it's to safeguard the investors' interests. It's to make sure that the investor participates in important board discussions and, provide guidance to the founders where necessary. If I could go down further. Reserve matters is interesting. As I said earlier, the investor is not interested in being a controller of the company, and for that reason, it usually is a minority shareholder. This means that sort of the default position, whether under Singapore law, England and Wales law, or Indonesian law, the majority shareholders would be able to push through any resolutions, right? So reserve matters, think of reserve matters as a form of minority protection, where in order to approve any of these, in order for the company to do any of these things on the reserve matters list, the company first needs to obtain investor approval. 1, 2, 3, 4, 5, 6. Okay. Preemption rights, rights of first refusal, basically means before the company issues shares to anybody else, new shares, the company must first offer those shares to the investor. Straightforward. Let's not talk about that anymore. Right of first refusal, tag along right, drag along right, and restrictions on founders transfers. Let's talk about those 4 provisions together. Those 4 provisions all relate to transfers of shares, okay? The expectation is that the founders are the first people in, last people out of the company. Generally, the founder is not expected to the expectation is that the founders don't transfer any shares, right, within a fixed period. Sometimes a little concession is made. Founders are allowed to sell some of their shares, but the general expectation is founders would not sell shares. Now, in the event anybody else sells shares, whether an investor or otherwise, a right of first refusal simply provides that the investor first offers these shares to other people on the cap table. So let's say, Finn and I were both investors in a company, right? I want to sell my shares. He's got 10 shares in the company. I've got 10 shares in the company. Founder holds 80 shares, right? Founder is not allowed to sell any of his shares. If I wanted to sell my 10 shares to a third party, I first have to offer them to Finn. Okay, and he gets to decide whether or not to buy my shares. Now, if he decides to buy my shares, I'm compelled to sell him my shares. If he decides not to buy my shares, I then have the right to sell them to a third party, provided that I don't sell them to the third party at a price lower than which I offered Finn, right? Now, if Finn, let's go on to tag along, right? If Finn doesn't want to buy my 10 shares at the price at which I offered him, and I sell them to a third party, Finn then has a tag along right that allows him to tag along to my sale. So he can then say, I want to sell my 10 shares too. Please go and ask your third party buyer to buy my 10 shares in addition to your 10 shares. So I'll have to then go to the third party buyer and say, hey, I know you wanted to buy my 10 shares, but now I've got this other guy who wants to sell his 10 shares as well. Is that okay? And if the third party buyer says yes, then the third party buyer buys 20 shares. If the third party buyer says, no, I only want 10 shares, then what happens is we each sell 5 shares to the third party buyer, right? Because both Finn and I have 10 shares each. Drag along right is the last right, relating to transfers of shares. And a drag along right basically means that a majority of shareholders has the right to drag a reluctant minority into a sale. Now, this is because startups, or rather venture-backed startups, are not meant to be generational companies. Founders are not building businesses for their grandchildren to inherit. Instead, founders need to deliver an exit within a certain amount of time, right? And you will see this later on in the term sheet as well. There is a concept of exit. Why is that so? Because investors are venture capitalists are institutional investors. Funds have limited life. So the venture capitalist is contractually bound to liquidate and return the investment to its own investors within a fixed period, right? And for that reason, it may be required to exercise a drag-along clause to drag a sentimental founder or to drag a reluctant investor into a sale, right? It simply means that a majority of the shareholders can drag a reluctant minority into the sale. Restrictive covenants on founders. Founders are basically wedded to the business. If they raise venture capital, if they raise institutional funding, they're expected to work in the business. They're not expected to compete with the business, right? They're also not expected to solicit any employees away from the business. Information rights. Institutional investors are basically financial institutions, right? And they have reporting obligations to their own LPs. Whatever it is the VC needs to report to his LP, you can be sure that the VC will ask the startup to report, right? So if I need to provide monthly updates to my LPs, then sorry, startup, you're also providing me with monthly updates, right? If I have to provide quarterly reports, if I have to provide ESG reports, all of that information comes from the startup. Counterparts is not something that I want to talk about now. It's just sort of a boring boilerplate clause. Could you go down to the next? I think we are at the tail end now of the. That's it. Finished with 4 minutes to spare. Is that the end of the term sheet?
I think there's just a cap table at the end. Oh,
Dispute resolution. Yep. Could we scroll further down, please? That's it. Yeah, nothing further. So the rest were just boring boilerplates. Counterparts means that you don't all have to be in the same room when signing the document. Disputes resolution says that, means that if there is ever a dispute, which laws apply. And here it's Singapore law because this is a Singapore model form. Just as easily, it could be Indonesian law, and where you go to settle the dispute, right? For Indonesian investments, and this is probably the last nugget of advice I'll leave you with today, the usual choices between courts and arbitration, right? Indonesia has not entered into a bilateral recognition of judgments treaty with any country in the world, which means that if I obtain a court judgment in Singapore, in relation to a dispute around this term sheet, I can't enforce that judgment in Indonesia because Indonesian courts are not required to recognize the judgments of Singapore courts, right? However, Indonesia is a party to something called the New York Convention, and what that means is Indonesia and Indonesian courts are required under the terms of that treaty to recognize arbitration awards. So if I obtain an arbitration award from anywhere in the world, from New York, from Paris, from London, from Singapore, and I brought that to an Indonesian court, in theory at least, the Indonesian court is required to enforce that arbitration award for me. So the advice to you, ladies and gentlemen, is to ensure that your document, whatever it is that you sign, has, and irrespective of the governing law clause, always provides that disputes are settled in accordance with by arbitration. All right?
That is very, very helpful. And I know you have to go because your alarm keeps going off.
Apologies for that.
No, no worries. Apologies that we kept you so long, and thank you so much for going a little bit overtime. Joel, Shen, amazing as always. Thank you so much.
For you, Finn, I always have an extra half hour. Thank you very much, everyone. Thank you again, Angel Studios. Thank you very much, Habibi Innovation Incubator, for having me today. Finn, pleasure to speak to you as always. Take care, everyone.
Thank you. Thank you, Joel. Thank you so much. Wow. Okay, that was quite the session. The last 15 minutes, that was quite intense. If there are any questions, I will definitely try my best to answer. For the question from Rahmat, if there are any Sharia-based investments available, of course, there are Sharia-based investments available in Indonesia. But maybe it would be good if you specify what specifically you're looking for, and then we will try to find more information on it, because at the moment we're not experts on it. And I think Joel is also not an expert on Sharia-based investments. So maybe Rahmat, you can write it, you can say it immediately, it's up to you. So what specific Sharia-based investments are you looking for? And then we will do our best to find it for you, basically. No? Okay. You can write it down later if you want. That's okay. Are there any other questions or concerns or comments? If there aren't, then we can move on to the next slide, please. So again, thank you so much for today. So basically, again, today was a special day because we brought in Joel Shen, and he has a lot of experience between different countries and cross-border trade. I think for our friends in the UK, in Qatar, and also in the Netherlands, and also maybe in China, this could be useful for you. If, right now you don't have any question ready, but you do have questions in the future, please do reach out to us and we will try our best to answer them, and we'll try to reach out to Joel Shen as well. So that was today, and in the future we will have two more events coming up. So next week we will have an offline event at Binus FX, which is in Jakarta. And Helga Angelina, the CEO of Berggreen, she will be talking to us about funding mechanisms, all the things that she has already used in her company with angels and also with basically high net worth individuals. And then we will also have Anton Irawan, the CEO of Goritax, and he will talk about tax planning, how you can legally reduce your tax as much as possible, with the emphasis being on legally, obviously. Then after that, not done yet. After that, we still have one more business introduction coming up with Time Door Academy. Time Door Academy is an investment opportunity, and we will introduce that to you. So it's basically a coding school and a STEM subject school. And this might actually be quite interesting for quite some people, and they're open for investments. So we will have those discussions. So just to emphasize, 20th of March is an offline event, not an online event. If we do see that there's quite a lot of interest for our overseas basically partners and participants, we will try to find a solution for that as well to make it hybrid, but this will be an offline event. And we will provide iftar. So for our friends who are fasting, for breaking fast, there will be iftar provided for you. And yeah, that's the session for today. And for our friends today from the Ministry of Foreign Affairs or from embassies all over the world, again, thank you so much for making the time to come here today. And if you're interested to learn more, please just click the link or we will put it in the chat and then we will try to reach out to you afterwards. So basically you can register or you can ask questions to us and then we will reach out to you. So that was it for today. And thank you so much. Don't forget, we still have one post-event survey, which we will do now. And then after that, we will leave you to your respective activities. And again, thank you so much for providing the time to come here today. And sorry that it went over a little bit, but I think the discussion was definitely very interesting. Joel Shen definitely is a very knowledgeable man, and we're very, very lucky to have him visit us today and come here with us today and, share his knowledge with us. So for Rahmat, if we have any events outside of Jakarta or maybe Indonesia. So outside of Indonesia, as of now, we don't have any plans. It will mostly be in Jakarta or specifically Indonesia as of now. But again, for anyone who is outside of Indonesia, basically just let us know. And I think in the survey, in this registration today for the Zoom link, everyone did mention their country. So if you're outside of Indonesia, we definitely try as much as possible to have a hybrid option for all of the events that we do, whether they're offline or online. Okay, and Bale from the High Incubator, from one of the implementers, basically he wants to remind everyone who does want to come to the offline event to register so that we can RSVP and make sure that we have enough food for breaking fast so that no one goes hungry. Okay, so Arswendi, thank you for the question. So basically what High Incubator does is we have two things. So one, as I mentioned earlier, we are a community of angel investors, which means that we build the community, we maintain the community, and we also have classes, capacity building classes like today, for instance, where we are not offering any investments today, but Joel Shen, an experienced corporate lawyer, he does share his experience, and this is what we call a capacity building class. On the other hand, we also have investment opportunities coming forward. All of them are based from Indonesia-based companies. And in that regard, we give an investment memo on these companies, and we will very objectively say, what is the information that we have gathered about this company and so on and so forth. And then after that, we will facilitate in the process moving forward. But in the end, obviously, all investment decisions will be made by the individual investor. So we will not recommend any certain investments. We will just give you options that are available. And in the end, it will be your choice to make if you feel interested to invest or not. And when it comes specifically to safe agreements for companies who are open for, so again, not every Indonesian company is open for foreign investment. The ones who are open for foreign investment, they normally already have a boilerplate or like a template of a safe agreement. And then what we can do is can factually and objectively tell you like what makes sense and what doesn't make sense. But again, in the end, the final decision is yours. So hey, Ariel. So I hope I mentioned that correctly. So Ariel, thank you so much for saying that. So basically, if you are interested, then you can just go to that registration link. Bale or Raka, can you just put that registration link in the chat as well, so it's easier to copy? So basically, yeah, just join that registration link and then you're good to go. And then after that, someone will reach out to you from our team. Because yeah, we have capacity building classes and also investment opportunities, and then it will be up to you what interests you more. Are there any other questions?